which is very nice that we can do this. And I just want to say, I know Lloyd has an announcement or two, but I just want to say this is John Lee. I'm with St. Louis Real Estate Investors Association. Today is September 15th, Tuesday. And welcome to our Professional Premier Series. We're going to continue tonight. We're very, very fortunate. We have David Specter from Choice Home Warranty. He'll be starting off tonight and telling us all this great stuff about the home warranties, which I'm a big believer in. Then we also have Jeremy Heisserer. He's the agency owner of the Farmers Insurance Group, and he'll be coming on. And then we also have Hakeem Valles, NFL tight end. He's a real estate investor and a serialpreneur. So we're really excited to have everybody. We have quite a few coming in. We are going to be recording this, so we will have this on the website. For those of you, if you come in late or if you don't get to see the whole thing or just want a refresher, I know for me personally, it's always good when I go back and watch watch it more than once, you know, the presentation. So anyway, Lloyd, did you have something that you would like to say to us?
Yeah, I just wanted to mention, I usually give a little heads up. Oh, and by the way, yeah, I'm Lloyd Allender. It says Bonnie. When I was testing out the registration link, I registered both myself and my wife. I clicked on the wrong one when I actually logged on here. But anyway, no, I wanted to let everybody know. Yeah, John's got some great programs lined up for October. Starting out with Ron LeGrand. He's going to be doing on October 3rd. He's going to be doing a little intro section, introduction to a full 5-hour seminar on October the 9th. It's going to be on all online virtual seminar on terms on Friday, October the 9th. So if you want to put those dates on your schedule. If you haven't heard of Ron LeGrand, yeah, he's doing events, virtual events. In fact, I'm surprised John got him on. We got on his schedule. He's been doing virtual events all over the country and all over the world. Probably, he's a very sought-after speaker, and so I'm glad we were able to wrestle him down here. It's been a couple years since we've had him in St. Louis, but I'm looking forward to hearing from him again. So yeah, with that, I'll let you go ahead. I guess we're going to start out with David Specter.
All right.
Take it away, David.
So I would say good morning, good afternoon, but this is good evening. I'm used to saying good morning. So kind of a change, and I got my 3.5-year-old and 1-year-old, and they're being put to bed. So I'm hoping the wife can handle both at the same time with no assistance. She's the superhero. She can do it. But if need be, you guys might hear a cry here and there. I apologize. What are we going to do, right? This is COVID season. Anything goes. All right. So just to let you guys know, I've actually been in the home warranty industry for 9.5 years. So I've been around for a good enough sample size, almost a decade, to understand home warranty, what it consists of, what should be covered, what should not be covered. And so I want you guys to feel comfortable with home warranty and know its value, because it's unbelievable. Whether you guys are, plan on being a landlord and, and having tenants, how does home warranty affect you? Immensely. And so I want to talk about things like that. Or maybe you're just looking to, do flips. How does that affect you? Or, things of that nature. So I'm going to hit a bunch of different points, and any questions, I see the chat. So just throw out any questions or just stop me, and very informal. So just let me know I can answer for you guys. And I have a PowerPoint presentation here. So let's see if I'm any good and can figure out. I see the share screen. Give me a second. I got to get it on my screen first to share it. All right. 1 sec, everybody. Share screen. All right. Can everybody see that? Okay. All right. So, like I said, any questions, just interrupt me. I promise I'm not going to eat up the whole time, even though I love to talk, if you guys can't already tell. So, all right. So Choice Home Warranty, and there's about 46 warranty companies in the state. So it's just like a car or a real estate agent or really anything. There's differences between Choice and other warranty companies. And so once again, any questions, let me know. But in my personal and professional opinion, we are very, very strong. So what items are actually covered under a home warranty. So we cover the systems, that's AC, furnace, plumbing, ductwork, water heater, and electric. And then you have all your appliances, washer, dryer, fridge, range oven, cooktop. You guys can read that. So the first slide here really is just an overview of what a home warranty is meant to cover. And we cover repairs, and if we cannot repair it, we replace it. So let's say we can't repair that AC, we would replace it. Same with any of these systems, any of these appliances. I do want to mention as far as AC goes, some people might wonder but not ask, or maybe nobody knows. So I'm going to mention this. But ACs, they've kind of phased out, not kind of, they have phased out Freon, or also known as R22. That's a type of refrigerant that the older AC systems run on. So it's supply and demand. They actually legally stopped producing it. It's still available, but they can't produce it. So what happens? The old systems, it's now supply and demand. So per pound, you could spend $100, $150, $200 a pound for refrigerant. And it's only going to get worse as the supply dwindles. We actually cover Freon at 100%. So when you have the warranty, that shouldn't even really be a concern of the cost for Freon. And if we need to replace that system, we're of course not going to replace it with an R22. We're going to replace it with a 410A Puron ran system. So a new energy efficient system and a minimum 13 SEER. That's just a fancy word for energy efficient. But bottom line is, I'm saying, don't worry about the old refrigerant. We got you covered. And if we need to replace it, you're going to get a new system that runs on the new stuff. We got you covered. That's important to mention. Furnace, 80% efficiency at a minimum on a replacement. If they have higher than 80%, we're going to replace it with whatever they have, like for like. And that's how all the appliances go. It's like for like based on features. So no matter how you look at it, your clients can be taken care of. Any questions about what I just went over? I love questions, but no questions yet. All right, we'll keep moving. All right. So the 3 policies we offer are basically the Choice Plan, the Choice Plus, and then the Choice Ultimate. The Choice Basic includes everything but excludes washer, dry, and fridge. The middle one includes washer, dry, and fridge, but the 580 is the one that you and your client should always go with, because that's where the comprehensive coverage is. When I say comprehensive coverage, when it comes to warranty, it's about what's the coverage on those items, not how many items you have covered, really. I mean, I could say, hey, you got 10,000 items covered, but if we never pay a claim, who cares how many items you have covered, right? So with the 580, that's where the coverage is. And when I say coverage, I'm referring to things like permit. So everybody on this call should know, in St. Louis County, you replace a water heater, a permit has to be pulled. A furnace permit has to be pulled, AC system permit, and even down to a toilet. If you go to Lowe's and buy a new toilet, they're going to charge you for a permit. And a dishwasher. I mean, it's insane, you know, that they say this, but these are facts. We cover the cost of permit. We also cover the cost of code violation. So let's say you have a water heater, we have to replace it. It has no expansion tank. We will include an expansion tank because that's county code if it requires it. Most counties do. That's going to be covered in the warranty. We'll cover haul away of the old system to install the new. We'll cover sediment for water heater, even though that's pre-existing, right? Sediment a water heater is not going to fail due to sediment if it's 1 or 2 years old. It's going to fail to sediment over a long, long calcium sediment buildup. We still cover. We cover undetectable. You didn't know until it actually failed. And there's only a $65 service fee on all 3 policies. So $65 is due. We send a company out. We repair it. And if we cannot repair it, we replace it as long as it's a covered item. That's how the process works. You file a claim. We send a company out. So any questions about the policies or kind of the process to some extent? I'm going to hit a couple other things, but any questions so far?
Yeah. Sorry. Could I ask a question? You seem to make a good argument for the third, most expensive policies. So
Sure.
Why would you offer any of the other 2, if like it doesn't cover anything? Like when would you use the other 2 for, if that's the case?
I mean, if you have a brand new AC, let's say you do a gut rehab, right, and you're putting in brand new everything. You say you put in a new AC, a new furnace, a new water heater, and maybe it has a couple old appliances, or you're selling it and you want to give the buyer peace of mind, but not really worried about the systems really. I would say do the 500 or do the 420 or not. What happens if you're on in a competitive offer and you can only get, $500 from the seller and you can't get the 580. Well, you'd order the 500 and either say, okay, well, I got the seller to cover it. It is what it is. Or you can do the 500 and chip in the difference at 580. So by far, we sell more of the 580 and Choice Ultimate than anything else. The only time I really see less than that 580 is if it's a negotiation and that agent and client couldn't get the 580 and nobody wants to pay out of pocket. And they're just happy to have a warranty. But, you know, I own investment properties and I have a primary home. I have the Choice Ultimate. I mean, why, for $80 price difference, it's a no-brainer personally, you know, but yeah.
Okay, that makes sense. Thanks.
Yeah, sure.
Hey, David,
Sure.
from what I read there, if I have a washer and dryer that's bad and I've got the $500 system, you're going to leave the old ones there and not haul them away?
You would have to pay for the haul away of the old systems, correct? You could do it yourself or
You're
you could
truly
pay that
kidding me.
vendor. What's that?
That's a true statement that you won't haul it away.
That's a true statement, correct.
So what's the word extras under the 500? And
Extras are the permit, the code, the haul away, sediment for water heater. It goes into elaborate, increases some small caps on toilet. So now instead of getting a smaller cap on toilet, now you have $600 for that gold-plated toilet that you want. I mean, it's some silly stuff like that. But the real value, and that's why I put it on there, is permit, code, haul away. I should have put sediment for water heater because that's a biggie. As well as, and I believe I almost missed this, compatibility for that 580. And when I say compatibility, I'm referring to what happens, and these are real examples you guys all probably lived with or heard about or dealt with firsthand, I'm sure. But what happens if we replace, I mean, let's be honest, when it comes to AC, you have two major components, right? You got a condenser and you have an A coil, right? Let's just break it down to two systems, right? Inside, outside, condenser, A coil. And of course, there's other components inside, compressor, whatever, but condenser, A coil. What happens if the condenser fails, but the A coil still works, right? Technically, we could say under the 420 and the 500, well, we only cover what mechanically fails. It's the condenser that mechanically fails. We're only going to cover the condenser. So then what happens with your A coil? You're more than likely going to have to be out of pocket 100% because it hasn't mechanically failed, but yet they need to be matching unless you get a piston or TXV valve, and that's even a possibility. But more than likely, you're probably going to have to replace that A coil. Under that 580, we cover compatibility, and we would replace that A coil and that condenser versus a half-ass job of only covering what actually mechanically failed. And that's a huge, huge thing to be able to say what I'm saying.
Well, if that's true, then it's up to you to find an R22 to go in there, if that's what we need.
I mean, we would cover we would actually end up covering a Huron 410A system, but if we replaced a condenser, we'd either be potentially looking at a cash out or saying, hey, we're going to replace the condenser, but before we actually move forward with the condenser, what are your plans with the A coil so we can make sure they're compatible? And
Okay, what's a cash out? You say cash out. What's that mean?
That's us sending a check to the homeowner versus actually physically replacing it. So the last thing I would want to do is say, hey, we're forcing you to this condenser, but have fun figuring out the A coil. We would want to make sure that it's going to match whatever you're going to do with that A coil. But we're only talking if you're doing a 420 or 500. If you do a 580, we're covering the whole shebang, so you really don't have anything to worry about. So I would say do the 580. That's just so much value. We're not even having to worry about the A coil. We just simply do a 410 replacement A coil condenser, 13 series, you're good, you know? So I wouldn't even mess with the 420, 500 in regards to what we're even talking about, to be honest with you. Did that clarify or help or maybe confuse even more? I don't know.
No, I fully understand what's happening and I understand where I am.
Got it. So, but we will work with you no matter how you look at it. I just want to make sure, I mean, you're talking $80 price difference and we're talking a whole entire system replacement. I mean, it's always try to do that 580. So vendor dispatch. This is rather unique. I'm not going to hit other warranty companies I've worked for, but Choice is not my first company. I worked for a different company for 7.5 years and Choice for 2. So this is really unique. I've never seen another company do it. When I left my previous company, I interviewed 6 warranty companies, and this really drew me in personally. So when your client files a claim, we take that work order and we shoot it off to all of our vendors, 20 to 30 vendors. Whatever vendor wants that job will go in and grab that job versus taking a claim or a work order and just sending it to one company and saying, hey, you have 24 hours to call the homeowner. Because that's what the traditional warranty company does. With us, we have companies fighting over the jobs, first come, first serve, whatever company wants it, grabs it, commits to it, and it locks all the other companies out, and they have to commit to a day and time. That's our process. So you have vendors wanting the business, availability for the business, and fighting over the business. And with all of our vendors, we already have all the rates negotiated before they even grab their first job. And we have their signature on it. We have our signature on it. So we already discussed their labor. We already discussed how much we're going to cover for this and that and everything. So they're ready to rock and roll. That's really, really cool. Calls for faster service. I am going to ruin my own presentation because I think it's that exciting. I have a slide, so I'm ruining one of my future slides. But if we don't find a vendor to run that job within 6 hours, not run the job, but within 6 hours, but to grab that job within 6 hours, we will let your client hire their own company, and we would refund it at a retail rate. Of course, there's a process. They have to, but it's a 5 bullet point process. I mean, it is literally the easiest thing you could think of. But to be able to tell your client, hey, within 6 hours, we'll have a company lined up, and if we don't, great, you can hire your own and we'll refund it. How many times do you hear that from a warranty company? That's really, really unique. Like I said, I just ruined my own presentation. I just get excited about my own stuff. So I'm sorry.
So I'm sorry, can I ask a question? So I actually have Choice Home Warranty, and I had I'm sorry, 1 second.
Yeah, I'm trying to find you. I got a bunch of people on here. I'm trying to see your face. But I don't know where you are.
Here I am. I'm doing video now.
All right.
So I actually have Choice Home Warranty. I called out the vendor, or I did the claim, and the guy came out and he looked at the issue. There was just a leak in my basement.
Okay.
I didn't realize that he's actually the same person who would do the repair as well. Is that correct?
I don't know. I don't know if I understand your question.
So the person who came out, the vendor that you're talking about, the vendor dispatch,
Yes.
he came and did the inspection. And are they also the same people who would do the repair? Because I didn't realize that he would also do the repair.
Yes, they are. It'll be the same company. So we would send off a company. They would diagnose the issue, submit it to us, and then they would come back and do the repair. Now, if it's under a certain dollar amount, and it varies based on the vendor's track record, reviews internally based on homeowners and things, there's a bunch of variables, but every vendor has X amount of dollars. So if it's going to be under, hypothetical, let's say $200, we don't even ask for a diagnosis, and we say, just do the job. That way, we're not holding up any service, any process, and it's just easier and say, knock it out while you're there, right? But if it's going to exceed that dollar cap for that vendor, we require for them to submit their findings so we can make sure it's approved. Once it's submitted, once it's approved, that vendor will come back out and finish the repair or replacement. Yeah.
Okay.
Hey, sorry, David, could I add another question, please, if you have time?
Yeah, shoot.
So am I understanding this correctly? You're basically having vendors compete for the jobs of your clients. Is that correct?
That is correct.
How do you vet those vendors?
Sure, that's a great question. So first of all of our vendors are licensed, insured, and bonded. So we're not getting a random guy on Craigslist. They're all legitimate companies. They might be a 1 or 2 man operation versus a big company that's Jerry Kelly and has 20 trucks. But they are licensed, insured, and bonded. So they do carry a master policy of $1 million for insurance reasons. So any secondary damages that they may cause, they are responsible and that they will handle. But that's number one. Number two, they are all, after every visit from the tech, the homeowner gets to review them. So there's always reviews done by the homeowner that's submitted to us. And so we rank them based on that of where their standing is. We shoot it off to 20 to 30 vendors, but we tier them out. So we're going to send it first to tier 1, and that might be 15 vendors, and give them the first opportunity because they have the best reviews. Homeowners really like them, so on and so forth. But then it's going to shoot off to the next tier if nobody from tier 1 grabs it, so on and so forth. And it goes down the 3 tiers. I believe there's 3. So I'm going to say internal reviews. They're all licensed, and bonded, and they all actually have to complete their work. So if they don't complete a job, their account automatically 24 hours gets suspended, which is amazing. I should make it another slide just for what I'm saying. I mean, I think it's really that important. So what I'm saying that is the vendors are required to finish their last job. So if they're out at your home on a plumbing job, they turn in their diagnosis, we approve it, they have to complete it. Otherwise they get 0 jobs. So that forces the vendors to take care of it, not just go out, collect a service fee and run away, because that's the last service fee they're ever going to see if they don't complete it. So we track our vendors very, very closely. And we have something called recalls, where if they fix it, but it's not really fixed, and we send the vendor out and we guarantee everything for 30 days. If we fix it and the issue happens again within 30 days, it's free. We send the vendor back out. So we do stand behind our work. But if that happens, that's a huge mark against that vendor as a recall. And we track recalls because we don't want recalls. It's a disappointing moment for us, the vendor, and the homeowner. So there's a lot of quality controls, and we have a whole vendor relations department that calls our vendors, make sure they understand process, make sure they understand everything. So we don't just fly by the seat of our pants and just take on anybody. It's a legitimate process, and it really is a process.
Is it possible for the customers to see those testimonials from other maybe happy homeowners before they commit, I guess?
I mean, I could ask a bunch of agents and say, hey, can you give me a testimonial? What was your experience? I mean, I could, if you send me an email, I mean, within a couple days, I can ask as many agents as you want. I mean, my agents that I work with are very, very pleased with Choice. And we're selling quite a bit in St. Louis and the surrounding areas. So if you do want a testimonial from an agent vouching for our vendor network and the experiences, I'm more than happy to provide that. Just shoot me an email. I'll have the contact info and I'll get back to you in a couple of days. I'll say by the end of the week, just to make it an even, easy for me by end of week. And I'll make sure to give you as many testimonials as you want. That's not a problem at all.
Oh yeah. So yeah, that's fine. But I was hoping more along the customer side. Like I understand agents' testimonials are important, but the customer is the one who's asking for the work. If that makes sense. David.
Sure. Yeah. I mean, I can reach out to a bunch of homeowners and get testimonials. I mean, I tell homeowners to call me with any questions, and I get a lot of questions. Hey, is this going to be covered? Is this not? And then I kind of, once I get involved, I'm OCD and I kind of see it through the end. So I'm more than happy to call some of these homeowners and ask for a testimonial if that's really what you want. I don't mind.
Okay. All right. Sorry. Thank you very much, David, for answering my questions.
Oh, sure. No problem.
Hey, David, I'm pretty green to the real estate game here, so I got a couple of basic questions for you. The first is the 400, 500, 580. Is that per building or is that per unit? So if you had an apartment, how does that work?
Oh, so that's a good question. So I'm actually quoting out single family homes. I probably should have mentioned that because that's the most typical transaction is a single family home. So those are single family homes. So if it's a condo or apartment, right, it'll be a little bit less. That 420 will be 390. That 500 will be 470, and that 580 will be 550. Don't even try to memorize anything I'm telling you. Just text, email, or call me, and I'll tell you exactly what it is.
So just on tracking you though. So if I've got a 4-family, it would be whatever that number is per unit, or is that for the entire building?
We would cover the fourplex. So we have pricing for fourplexes, and it's actually pretty good. I just quoted somebody out like an hour ago on a fourplex. Don't quote me, but I want to say it was in like 800s for a 4-family, which is super cheap, covering 4 units. But yeah, we cover fourplex, duplex, single family homes, condos, mobile homes. We don't cover commercial.
Sure.
But otherwise, yeah, we do cover it. And you can just contact me or Choice. We would give you a price. And it's in our brochure, and I'll make that available to everybody on this call.
And then second question, because again, first time hearing about this, I just want to make sure I'm understanding it right. Let's say we go the 580 route, and then something happens, the fridge stops running or whatever, $65 charge to the person who purchased the policy, and then somebody's going to come out and check it.
Yes.
You're going to shop it out, and then is there an additional charge to the homeowner, or is that $65 charge the only charge the homeowner has?
For the fridge, there's only going to be that one charge for that fridge. And I actually have a slide mentioning non-covered cost to provide full disclosure to everybody, because there's a lot of misconception about home warranty. But to answer your question, it's $65 and we'd repair or replace that fridge. The homeowner would be $0 out of pocket on that fridge.
And
Yeah.
so then I guess what I'm trying to get to is, do you see that people will sometimes use a home warranty program in lieu of having a handyman or a contractor, somebody else, trade people on deck, because you guys have your own vendors that you work with?
Yeah, I mean, I see us, yeah, I mean, the only kicker is that handymen can do carpentry work and move cabinets, and they can do some things that warranty doesn't cover, because we're not going to cover moving cabinets or messing with flooring. Or so, I mean, so some handy guys, you know, they're more apt, all around jack of all trades. We just take care of the systems and appliances. But I mean, as far as, I mean, we have, I'm not gonna say we've replaced handyman, no. So I have 2 personal investments, and they both carry home warranties. They both are Choice Ultimate, but I also have a handyman. So I have one property in Fenton. This is my own personal experience, okay? And I might have a property manager, and the property manager is the one who handles claims, not even me. I don't even file them, okay? I let her handle that. I don't want to mess with it, I'll be honest with you.
Sure.
So everybody that messes with it, hats off to you guys. But so I have a property in Fenton. Choice replaced my water heater, fixed the oven, fixed the washer, fixed the dryer. But I had a deck issue last week. And I kid you not, the person fell through the deck, like literally actually fell through the deck. Thank God it wasn't too high up. Thank God she was okay. But that literally happened. Home warranty is not going to cover the deck. So I had my handyman come out and take care of it. I had my vanity crack at this house. Home warranty is not going to cover the crack of the vanity. That's not wear and tear. So my handyman replaced that vanity for me, right? So they couple really well together. But if my water heater goes out, I'm not calling the handyman, I'm calling the warranty, you know? And that's what happened. So they couple really well together. I always say have a handyman on deck, but for actual issues, I mean, if we're talking 580, I mean, one water heater replacement, boom, that's 3 years worth of a warranty. Yeah, I mean, it only takes one claim to pay for itself. Or do you want to talk AC? We're talking $3 to $5 grand.
Yeah.
You know? So, I mean, it's worth having, but I don't know if I just went on a rant or if I made sense.
It did make sense. I guess final question is, are these numbers here a one-time or are these annual?
Annual, you can pay all at once, or you can break it down monthly. But it is per year. Correct.
Gotcha. Helps. Thanks.
Yep, you got it. All right, and hopefully I'm not taking up too much time. Cut me off if I am.
No, you're doing great. What we may want to do is just hold the questions till the end, or put them in the chat,
Okay.
and then we'll address them. Because specific questions, we can go down different rabbit holes like this, and it's all good. I know you got all the answers, but we do want to get everybody in tonight, and we want to hear everything. So
I'm just gonna. I agree. I'm gonna keep talking, and we'll address all the chat and all the questions at the end. And then, of course, you guys have my cell number. I work 7 days a week, like you guys do.
We'll give out your contact information too, because I know, like me, there's a lot more questions that people have. So
sure.
Thank you, David. Yeah.
No, you got it. Thank you. So, diagnosis turnaround time. So we require our vendor to actually submit the diagnosis, and we guarantee approval within 10 minutes. So if we can't find a vendor within that 6 hours, we say hire your own company. Your vendor can actually submit the diagnosis on site, and we'll approve it within 10 minutes. So they're not gonna have to sit there and wait to know if it's covered or not. If you end up having to hire your own vendor, if that 6 hours expires and you hire your own company, and your client will get an email saying they have that option. So that's one. Also, if our vendor goes out on site, we can get the diagnosis if they choose to submit it on site within 10 minutes. But we require that diagnosis next day. If we don't have the diagnosis next day, their account will be suspended, as in they need to close that out. We need to know what the diagnosis is, and we need to know that the repair was complete before we allow them any more jobs. So they actually have 2 requirements before they're ever offered another job. Hold them accountable, not just send out vendors. Let's make sure the job is, everything's submitted, everything moves forward. Real example today, water heater, went out for a water heater call. Homeowner's name's Jessica. I'm not gonna go in, I don't even remember her last name, but so she had an issue about her water heater. Company came out today. She contacted me via email and said, hey, what's the update? Well, it's same day. They were just out there this morning, but they actually submitted the diagnosis and water heater's being replaced. We already sent them an email. Vendor out same day and told her same day it's been authorized for replacement. So it'll probably be installed later this week. to be honest with you. That's fast though. I've done warranty for 9.5 years. It doesn't normally go that fast if anybody's experienced other warranty companies. Anyway, I don't even see the chat questions. I just see the numbers going up. So, but we'll address those at them. I told you I ruined my own presentation with the whole 6-hour window, but I think that makes us pretty special. Options, a lot of these options are a waste of your money. Don't do it. Roof leak is a waste of your money. It has a low cap, $500, and we're going to deny it. It's not worth it. Any warranty company I've personally seen, I've never seen a roof leak covered ever, because there's too many exclusions, and it has a cap of 500. So you're gonna pay for an option with a cap of 500, and we don't cover hail damage or a guy walking on a roof or an act of God, which is a storm. I mean, it's not logical. So if I can't recommend it, I'm not going to. It's that simple. Don't do roof leak. Standalone freezer, additional refrigerator. That's very straightforward. Our pool coverage is amazing. We have a cap of 1,500, but it is amazing. We cover the mechanical components. So pump, filter, a pump, motor, filtration, salt self. It's a saltwater pool. We have, like I said, we have a cap of 1,500. And speaking of caps, we cover AC for $5,000 and furnace for $5,000 and an appliance at 2,500, just so you guys know. But anyway, and we work at a wholesale rate and discounted labor, so that $5,000 goes pretty far. We can actually replace a whole system for a fraction of that, even 5 ton. But anyway, central vac, well pump, septic, we do rekey. $65 service fee, we'll rekey 4 locks, 4 keys. Your client can file this the day of closing, and we'll send a locksmith out and rekey 4 days, or not 4 days, 4 locks, 4 keys, $65. You cannot find cheaper for a locksmith. That's really neat. Can I take out a warranty on a rental? Yes. Same coverage, same policy, same service fee. There will be a 30-day wait period before coverage kicks in if it's not part of a real estate transaction. If it is part of a real estate transaction, there is 0 wait. Same day kick in. But if it's outside of a transaction, there is a 30-day wait, but you can get the same policy, same coverage, same service fee, same everything. Just let me know about it so I can order it to make sure it's documented correctly. Can I take out coverage on a home or a rental I already own? Yes. Let me know what's going on so I can set it up. Current promos. We offer promos every month. Right now, if you buy a warranty outside of the real estate transaction, as in you already own a home, condo, whatever, we will send you a check for $75. There'll be a 30-day wait, but you'll get a check for $75. Plus, you'll get 1 free month for every year, and you can buy warranties up to 5 years. I actually memorized the prices of the Choice Ultimate up to 5 years because we do them that frequently. If you asked other 2 policies, I would have to look them up, but I know the Choice Ultimate up to 5 years. We do $35 off discounts for vets, doctors and nurses for COVID to give back. In vets, our company is owned by 2 brothers, actually, privately held, and they're vets. They want to give back. And right now, we're either we're the 3rd biggest warranty company in the country. 260 something million last year in good rankings. Discount on multi-year policies. We're also a nationwide company in almost every state. Things that were not covered, we don't cover hail damage. We don't cover fire or theft or that. Yeah, baseball bat, somebody hit it, I don't know. That's not wear and tear. We cover normal wear and tear, mechanical malfunction. A car, you're not gonna drive a car for 500,000 miles. Same thing with an AC system, it's going to die. There's no prorations based on age or age of the systems. AC could be 50 years old. We can't repair it, we replace it. No age restrictions. We cover Freon at 100%. Hold times are 5 to 10 minutes. There's a callback feature for every single call, so you're not actually have to wait on hold. 10 plus years of a company, I think 12, 13 years now. Warranty will be warranty. There will be an issue if you sell enough of these. There will be a problem. That's just honest truth. But you call me, and if you're in the right, we'll take care of it. It's about doing the right thing. If we deny something or there's a problem, let's take care of it. It's, if you call me on a Saturday and say, you know what, it's 25 degrees outside, it's Saturday, I filed a claim, and the guy can't come out until Tuesday. That's a problem. Let me know. I want to be able to resolve it. What's not covered, like I said, we cover normal wear and tear. Personal service, there's my phone number, my email. I've been a business development rep. She helps me with service as well. That's her phone number, her contact info. Now I want to hit one last thing while I leave this slide up before I answer a couple questions. So setting the right expectations. Okay. I've done home warranty 9.5 years. I've worked for a competitor that also bought up another company. So I sold 2 policies, one of the biggest companies in the country. I left and came to Choice. Now, every company that I personally know does this, but research it because it might surprise you. Anytime there is a AC furnace or water heater replacement, not a repair, but a replacement, there will be an out-of-pocket charge 99% of the time. Now, if it's an appliance, no, it's the service fee because it's plug and play. A refrigerator, you unplug it, you plug it in, and yeah, you got a water line, but that's not really a modification. Give me one. I don't know if that was static or what, but if we install a new AC furnace or water heater, this custom work to get the system compatible with the current setup, custom work, and we don't, and that we call them modifications. In that Choice Ultimate, we cover $250 towards the modifications. So, and it's only going to apply for replacement. So just ballpark figures so you guys know, setting right expectations. So never tell your client, oh, you just pay $65, everything's 100% covered. That's not true. That's not true for any warranty company, I personally know. But if we replace an AC system, I mean, I would budget for $400 to $600. Water heater, $50 to $250. Furnace is going to be, I don't know, call it $300 to $600, somewhere in there. So we're saving you thousands and thousands and thousands, but there's still an out-of-pocket. And I rarely get any pushback, and I say this at every single meeting because I want your client to know, yeah, they might be $100 out of pocket for the water heater, but we just saved them $1,000. Or they might be $500 out of pocket for that AC, but we just saved them $4,000. So homeowners don't really get aggravated. I just don't want false promises being thrown out there. That's why I'm saying this. And we're no different than anybody else in this sense. I'm just telling you what it is. And I ask you, if you use a different warranty company, ask your rep, look in the brochure, because you're going to more than likely come across what I'm saying. It just hasn't been informed or it hasn't been shared with you. So I'm going to stop sharing and I'll answer some questions if that's okay with everybody. Yeah. All right. Yep. Is there a waiting period? There's no waiting period for a real estate policy. So if you buy the warranty through closing or within 30 days after closing, actually have up to 30 days after closing, there will be no wait period. Policy will start that day. If we also with, and it's something else to mention, if you always, of course, try to get an inspection, right? If you file a claim within the first 30 days, we could, if it's gonna be an expensive repair or an expensive replacement, we could ask for that inspection report just to make sure that it really was working before your policy started. Mm-hmm. So, you know, let's say 3 days into the policy, your client says, oh my God, my AC is leaking. It's terrible. I need a brand, we send a tech out and the tech says, oh my God, they need a brand new AC system. 3 days after closing, there's no waiting period, but we're going to say, hey, can you send us your inspection to make sure that this wasn't found beforehand? Otherwise, we're looking at more of fraud than anything else, right? Like you knew about it before the policy was active. But if it clears inspection, great, let's replace it. We're only going to ask for that within the first 30 days as fraud prevention to make sure nobody's taking advantage of us unethically. After 30 days, we assume everything's in good working order. Otherwise, somebody would have filed it. But this is what I'm telling you isn't really a big deal as long as, you know, it was working at the time of closing, you're good. Or if a repair needs to be had during the listing, get it repaired, save that document, and we'll cover it moving forward. No problem. It's about doing the right thing. Just make sure it's in good working order. That's all. Mm-hmm. Okay. Have to drop. Thanks, David. You got it. I like that. Thank you. When paying the $65, what is the method of payment? It varies from vendor to vendor. Some vendors take credit card, debit card. Some vendors take check, some take cash. It really varies depending on the vendor. If there's a situation where you don't want to pay cash or don't want to pay check, let me know or let Choice know. We can transfer to a vendor who does accept credit card, but it really varies. I mean, I can't say one way or another. It's going to be pending the vendor. Are the on-site technicians willing to sign a contract waiver of lien? So after, they're probably not going to sign it right then and there until it goes farther in the process. So we can get a lien waiver after the repairs are complete or once we know what the repairs are going to be. So yes, we will provide a lien waiver of the work that is done, 100%, no problem there, as soon as we know what that work is going to be. So we send a vendor out, we authorize the work, we can provide a document that is a lien waiver through that vendor. And that's not, like I said, that's not a problem at all. I've done that quite a bit. I actually have a document saved on my desktop for lien waivers. So I get that. That is pretty important for both parties just to have those lien waivers. So that's not, they're not going to do it right then and there, but contact me directly. I'll make sure we take care of that. That's not going to be an issue. Can we read the comments the customers wrote about the vendors? I don't even have access to those. So I'll be honest, no, because I don't even have access. But I will tell you, they are ranked. Like, would you recommend 1 through 10 the vendor to your friend? And then it's also like comments, write any comments. But I don't even have those. I mean, all I can do is get agents' testimonials and homeowners' testimonials. And that's me kind of going rogue and just asking for this. But I personally don't mind because I know how many people I've taken care of and my company has, so I can get that. But as far as actually internally giving that to you, I don't even have access to that. So I would have to say no on that one. But I wouldn't be so worried about the vendors. I really wouldn't. They're all licensed, insured, and bonded. If your client has a bad experience, for whatever reason, let me know. I'll get a different company out. If we can't get a result with one of our companies, maybe we go 0 for 2, which I can't remember the last time that's happened. Let's let your client hire their own company if we need to. So yeah, the vendor thing isn't, I know it's a big issue with other companies. We haven't really dealt with it in a negative way. +1 on customer wrote about the vendor. I already failed the first time, failing again on that question. So I'm gonna comment back on what I just said, but I mean, whatever I can do within my wheelhouse, I'm on board. So, I mean, hopefully, is there any other questions that you guys want to verbally ask while I can see your face, or you guys can type, or is there anything that I can elaborate on before I get the hook and I get the X and kicked out of here?
No, you did a great job there, David. Yeah, as far as the vendors, we have home warranties, and I've used lots of them over the years. I've never had a problem with the vendors. I mean, that's not even been a question. This is like, you call your insurance company, they send up somebody, look at your roof or whatever. It's a different scenario, but let's say they do that.
Yeah.
You know, they're going to say, you know, you can get it fixed wherever you want, or we can recommend some people. And that's, my experience is very good with the warranty companies. I don't really have anything to worry about. I mean, you could always go, I guess, to Google review if you really know.
Yeah.
Personally, I didn't even know who the companies were, and I didn't care because they came out, fixed it,
did the work. Yeah.
Deductible, and that was the end of the story.
Well, and I agree. And here's a question. When you go to Lowe's, if somebody goes to Lowe's and buys something and says, install it, nobody says, oh, well, who are your vendors? What vendor are you going to use? You just say, okay. Mm-hmm. And believe it or not, as interesting as this is, we have a lot of overlap with the same vendors as Lowe's and Home Depot because they do warranty work. That is warranty work, whether you realize it or not, that's warranty work. So we have a ton of overlap with some other warranty companies. With Lowe's, I can rattle off 3 companies that Lowe's works with that we work with just the same. And somebody said, yeah, you can check the BBB, 100%. But I mean, honestly, the vendors are a little concerned. My goal is just to make sure that your clients are resolved, claims are being paid as they should, and then any issues, questions, concerns, I'm here to personally assist. But I mean, so far so good. You know, I've gotten a little gray here from warranty work over the years. I'll blame that on the 3-year-old and 1-year-old though, you know. But anyway, no, I appreciate you having me, guys. You guys have my contact information. If you're not using us, give us a shot. And any questions, honestly, call me, text me, email me. I will respond. I'm very OCD. I will respond on a weekend. It drives me nuts not to respond. So, you know, but anyway, thank you guys so much.
Thank you so much, David. We'll put the recording on the link on the website and also your contact information. So I highly recommend Home Warranties. David's a great guy to work with. So thank you so much for coming here and spending your time with us, sharing you.
Thank you. Time to go help the wife with the kiddos if they're not already sleeping. All right, I'll see you guys.
All right, take care. Yeah, very informative. That's you know, like I said, I'm a big believer in there. I never was, but I've bought and sold a lot of homes that made the difference a lot of times in negotiations where I could say I would put the home warranty in when I was selling a house. Somebody's unsure, maybe the inspection was shaky, something like that. Just agree. It's not a big deal, and you can pay that at closing. I've had homes I was selling where I just took that out of the proceeds, so there was no money out of my pocket. So again, I just think it's a good thing to have, and especially with rental homes. So just keep that in mind. We'll put David's information on the website. We will have a replay also. Let's see. Next, we have Jeremy Heisserer. Jeremy, are you there somewhere?
Yep. Can you hear me?
There you are. Okay, great. Okay, a little tricky to do with all this virtual stuff, but thank you. Jeremy's going to tell us. Jeremy is the agency owner of Farmers Insurance Group right here in town. He's a specialist in so many areas, but especially in rental properties. That's something he knows very well. He kind of runs in the family, I guess. With his father, he has just a couple rentals, if I remember right, and. So you have some things you're going to share with us. If you would, just maybe, we kind of talked about this. A lot of the questions that Jeremy's gotten in the past were claim related, which those can't really answer a lot of those. Those are specific, but please, if you would, just put your questions in the chat, and then Jeremy will address those as soon as he's done with the slides. I believe you have slides, correct?
Yes.
Okay.
Let me try to
Right.
screen
And I'll be
share.
quiet. You just go right ahead and share that with us, Jeremy. Thank you.
Bear with me here. All right. Can you guys see that? Okay. All right. So my name, like John mentioned, my name is Jeremy Heisserer. I'm agency owner of the Heisserer agency here in St. Louis. I also have my own rental property as well, so I'm very familiar with insuring, rental properties as well as like homeowners, auto insurance, and all of that. So what I'm going to be talking about today is kind of doing a recap of what's changing in the insurance world in regards to COVID-19 for auto insurance, homeowners insurance, and commercial insurance. I'm briefly going to go over that, kind of give you some ideas on what's changing in the marketplace, but I'm primarily going to talk about rental properties, insuring them for rental properties versus vacant properties, insuring a house for replacement cost versus actual cash value, insuring them closer to market value rather than replacement cost. A lot of people have a house that would cost $150,000 to rebuild, but the house is only worth $40,000 or $50,000 or $60,000. So I'm going to kind of go over that as well. And then I'm going to end with liability coverages and renter's insurance. Kind of what I believe David was talking about earlier, how somebody fell through that deck. That kind of definitely made me think about liability coverages, making sure you have the right coverage on that. So in regards to COVID, like I said, I'm just going to kind of go over this briefly so you can see what's changing. I am going to touch on, like Airbnbs. I know that's kind of somebody, a few people in here might have that. So I'll touch on that. Just briefly on auto insurance, a lot of people are calling our offices saying, hey, I'm driving a lot less. Is my premium going to be decreasing? The best way to answer that is, in general, across the market, rates are kind of decreasing a little bit, but, because people are driving less, but serious accidents, fatalities are increasing. People are driving a lot faster these days, and people are running stop signs, things like that, just because there are less cars on the road. So that's really what's changing auto insurance. It's not, very much disruption for auto and homeowners. On home, the biggest change on that is a lot of inspection, or, if you do file a claim, the adjusters are actually doing virtual inspections or photos, those type of things, rather than coming out to your house. Especially they're not going inside. So if you do have hail damage on your roof and you might have water damage inside, a lot of them aren't coming out to your house to go inside of it. They might go on the roof, but they're generally not going inside. So they are going off of photos, things like that. The problem with that is you might not see all the damage, but there also might be a little bit more fraud involved as well, just because the inspector can't actually, the adjuster can't really see all the damages. They're just going by photos. Now, commercial insurance, that actually has had a lot of disruption. There's been through June of this year, there's been over 300,000 COVID-related claims for commercial insurance. The problem is most of them are being denied. A lot of insurance or a lot of companies, whether it's restaurants, Airbnbs, short-term rentals, are filing claims for what's called loss of income, business interruption coverage. They're trying to say, hey, because of COVID-19, we can't, we're not selling as much food. Or the short-term rentals, those have kind of improved recently now because people are trying to travel because of COVID. They can't do anything else. But in the short term, people weren't able to rent out their properties and stuff like that. So there has been a lot of claims, but the unfortunate part is a lot of them are being denied. Many policies have these virus or like pandemic exclusions. So it's unfortunate, but those are not really being covered. There are a few instances where people are having coverage, like the Wimbledon tournament for the tennis tournament. They actually, ever since SARS, were purchasing, it was like $1.5 million they were paying for pandemic insurance. So they actually got paid out about $150 million this year. So there are few and far between, but there are some cases where they're paying out, but there's not many of them. So that kind of brings me on to my next point, where after 9/11, there was a terrorism insurance. The government actually enacted this after 9/11 due to the amount of insurance claims that happened. Now policyholders can either accept or reject terrorism coverage for commercial insurance. A lot of people might not know they have it on like their rental properties, things like that. Generally on those type of policies, it's just automatically included, but I'm sure some of the people that own 4 families or apartment complexes, they usually do have to either accept or reject terrorism coverage. Generally, it's about 7 or 8% of what the premium is. Many auto home policies, those generally cover terrorist acts, but that's just kind of, where after this big incident, that a lot of people are in, I guess Congress enacted this terrorism coverage. So that kind of brings me on to the next point. My thought is in the years to come, there will probably be like a pandemic, a virus type coverage that Congress or, the insurance company will probably come out with, where it's a lot more common than just being, like I mentioned, one of the few companies or not companies, but sports was Wimbledon for the tennis tournament, got paid out $150 million because they had that pandemic insurance. But I'm sure it'll be very common on like short-term rental properties, Airbnbs, restaurants, those type of things. So that kind of, is just a brief overview of, what I think is going on in the insurance world in regards to COVID. So just wanted to kind of give you a brief explanation on that. And then that brings me on to my next, to where talking more about the rental properties and certain endorsements, things like that. Many landlords, when they do go and buy a property, they automatically insure it as a rental property. I've went over this actually a few years ago when I spoke. I'll touch on a few things that I spoke about before, and then I'll kind of go over a few additional things as well. But this is something very important, so I did want to touch on it again. A lot of landlords, when they do purchase a property, they go in there, they spend a few months rehabbing the properties. They automatically just cover it as a landlord property rather than a vacant property. Excuse me. The problem with that is after, the first 30 or 60 days, there's what's called vacancy clauses that come in effect. So they're going to deny things like theft, vandalism. If a pipe burst, floods the house. If somebody steals the pipes and it floods the house, things like that aren't going to be covered if you just insure your property as a rental property, when in fact you're in there rehabbing it. I always tell people, look on the news. If you see a house is on fire, generally half of the time, that house is like a vacant house. Those houses are a lot more common, to have fires. People are breaking into them, stealing the copper, things like that, or vandalism. So that's just, if you're going to be in there for a long period of time rehabbing the house, you definitely need to let, your insurance agent know about it. Feel free, give me a call. I can go over this more in depth. If you're just doing cosmetic damage or cosmetic where you're painting, things like that is probably not as big of a deal. But if you're going to have it vacant for that long period of time, you definitely probably need a vacant policy. And then if you do get a vacant policy, you can endorse things like vandalism coverage. If somebody breaks into the property, steals the pipes, floods the house, things like that will be covered. If somebody breaks in, lights the house on fire, those type of things will be covered. You can also add endorsements where we know you're rehabbing the property. Generally, it doesn't cost much extra to add that endorsement. If not, if it's, you know, it might not cost anything. But that way you can add that endorsement. We know you're doing rehabs to the property and you'll still be covered for that. Whereas if you just have it as a rental property and you file a claim, the adjuster is going to come out and say, nobody's even living here, you know, and there's a very good likelihood that they might deny the claim. And I'll go over that later. If you have any questions on this, just give me a call. If it is a very, very extensive rehab, sometimes that'll even be a different type of policy called like a builder's arrest policy. You can also endorse things like liability coverage. So I've had an example where some kids broke into a property, had like a party. One of them got hurt. They still sued the owner of the house. So things like that, you know, would be covered on like a vacant type policy. Also, I wanted to mention these policies do have like, it's called like a prorated refund. So let's say, you know, a lot of times you might be paying, say, $70 a month for a rental policy to have insurance on it. This policy might cost $100 a month. It's not going to cost that much more. But if you only have it for 3 or 4 months, you know, and the whole gist of things, you might be paying an extra $100 to $150 to have that type of coverage. So it's well worth it. And if you do pay for the whole year, they will refund money back to you as well. And then the next thing I'm going to kind of talk about is certain endorsements to look out for that might be hidden in your policies. A lot of times you just call your insurance agent and say, hey, I need a landlord. I need a rental property coverage for this house I'm buying. They don't really ask much questions. So I'll kind of go over some detail that you need to look for on like endorsements and things like that. So in regards to the roof coverage, a lot of insurance companies, this isn't just in regards to your homeowners or your like rental properties. This is also very common in the state of Missouri for rental properties as well as homeowners insurance. So a lot of companies will put what's called an actual cash value endorsement on your property. So what that, I just have an example here. Let's say your house gets hit by hail. They come out and say, okay, your house, your roof's 15 years old. If you have what's called an actual cash value endorsement on your policy, they're going to depreciate the roof. So in this scenario, as you see on here, let's say the roof's going to cost $10,000 to replace it. They're going to say roughly it's say 15 years old. So it's halfway through its lifespan. So they're only going to pay, or they're going to depreciate it $5,000. And then let's say you have $1,000 deductible. They're going to take that deductible off of there. And for that $10,000 roof, you're only going to get like $4,000 to replace it. So that's if you have what's called an actual cash value endorsement on the policy. They're going to depreciate it. Now, if you have a replacement cost endorsement, using this same exact example from above, if it's a $10,000 roof, they're not going to depreciate it. They're just going to take off your deductible. And in this scenario, you get $9,000 to replace a $10,000 roof. It's much better than that $4,000 on the actual cash value example. Like I mentioned, I would say in the state of Missouri, probably 50% of policies have some sort of actual cash value endorsement on it. So it's not just rental properties. It's also your own homeowner's insurance. So definitely I'd recommend looking at that. A lot of people don't realize it's on their policy until it's too late after they filed a claim. Have a lot of dissatisfied homeowners when they had to pay $6,000 or $7,000 out of pocket to replace their roof. And then some insurance companies only do replacement costs on the roof for say 5 years, 10 years, or 15 years. Other companies only cover it for actual cash value. So definitely be sure, take a look at your deck page. If you have any questions, I'd be happy to take a look at that for you as well to see if you have the replacement cost endorsement or like a actual cash value endorsement. Another thing that they're kind of hiding in these policies, a lot of companies just send it out. They don't really tell you about it. They put like a wind and hail deductible on there. So like if you say you have a fire, they'll still give you the normal flat deductible of like $1,000, but they have that wind and hail deductible. So a lot of companies are doing, like I say, a 1 or 2% wind and hail deductible. So in this scenario, I have, so let's say a house is insured for $300,000. Excuse me, if you have a, say a 2% wind and hail deductible on there, that doesn't mean it's 2% of the claim or anything like that. That means your deductible is 2% of what your home's insured for. So on a 2% deductible on a $300,000 house, that means you have a $6,000 deductible. A lot of insurance companies do not even tell you that you have this on the policy. Please take a look at it. Like I said, it can cost you a lot of money come claim time. So let's say hail hits your roof. In this scenario, it doesn't matter. You're going to have a $6,000 deductible because you had a 2% wind and hail deductible. Another thing is if, say, a tree falls on your house, those type of things, that's wind and hail. Any type of incident like that, you're going to have that high of a deductible. So please keep in mind, you know, check your, it's not just your deductible. You might also have what's called a wind and hail deductible. The next slide. So what I kind of want to talk to a lot of investors, you know, go out and buy a house for say $60,000 or $50,000, and they talk to their insurance company and they tell them, you know, you need to insure this house because it's going to cost about $150,000 to replace. They tell you need to insure it for replacement cost. You know, but a lot of people only want to insure it for what it's worth. You know, it might be in this scenario I'm using, say it's only worth $60,000. They only want to insure it for $60,000. A lot of companies can do that. Some companies are going to tell you, no, you have to regardless insure it for $150,000. You know, other companies will insure it for less than that. Like in my scenario, I'm going to say $60,000. They'll insure it for $60,000, but then the entire policy, not just like the roof I was talking about, the entire policy will have an actual cash value endorsement on it. So to give you an example, let's say you have a $30,000 kitchen fire. They're going to come in and say, hey, this house is like 40 years old. The kitchen's 20 years old. We're going to depreciate it. And on that $40,000 kitchen fire, you might only get, say, $20,000 to replace that $40,000 kitchen fire. So if you are insuring these houses for a lot less than replacement cost, please be sure that you have like either we have what's called a repair cost endorsement. So in this scenario, if say you do insure the house for $60,000, if you have that $40,000 claim we were talking about, we will pay $40,000 because we have the repair cost. We're going to pay repair cost up to $60,000. So to give you another example, let's say you have an $80,000 claim. In that scenario, the most we're going to pay is $60,000 because you have the max that we're going to pay is $60,000. So we're not saying that we could completely replace the house, but we're going to replace whatever goes wrong up to $60,000. A lot of investors are okay with that because they say, all right, instead of me rebuilding the house, going through the headache, spending $150,000 to replace a house that's only worth $60,000, instead of that, I'm just going to sell the property for a few $1,000s, take my money and go buy another rental property. You know, a lot of investors decide to do that rather than going through the headache of rebuilding the house for $150,000 or something like that. So we do have that option to what's called a repair cost endorsement. Again, please be sure if you are insuring the house for a lot less than what it's going to cost to rebuild, please make sure you don't have an ACV endorsement on there, the actual cash value. And that kind of brings me to my next point. Excuse me. I did talk about this the last time when I came out as well. It's called, instead of like an ACV endorsement, they might also have what's called a co-insurance clause endorsement included on the policy. A lot of insurance companies do this on the rental properties. So what that means, a lot of them have what's called an 80% co-insurance clause. So what that means is, I'll give you another example. Let's say your house is they think it's going to cost $200,000 to replace. If you have an 80% co-insurance clause, that means they want you to insure the house for at least 80% of what they think it's going to cost to rebuild. So in this scenario, 80% of 200,000 is about $160,000. So what the insurance company is saying is, we want you to insure it for at least $160,000. If you do that, we will pay exactly what it's going to cost to replace everything up to $160,000. So I have an example on here. If, say, that $200,000 house, you only want to insure it for $100,000 because that's all it's worth. If you have an 80% co-insurance clause, they're saying, well, we want you to insure it for at least $160,000. So in this scenario, you're only insuring the house for about 62% of what we think the house would cost, or what we want you to insure the house for. So in this scenario, let's say you have a $50,000 house fire. If you have a co-insurance clause, they're going to come in and say, you only insured this house for 62% of, what we wanted you to insure it for. So we're only going to cover 62% of the claim. So in this scenario, you're only going to get about $31,000 to replace that $50,000 fire you had. Now this goes into a lot more detail, but I'm just giving you a brief explanation on kind of how it happens. It gets in a little bit more detail than this, but an overview of it is, if you do have these co-insurance clauses, you definitely need to make sure, because you might be, $15,000, $20,000 out of pocket come claim time. And then the last thing I'm kind of going to talk about is liability coverage and renter's insurance. Like I mentioned with David, when he was talking, how his renter, he mentioned, fell right through the deck. Thank God it was probably a lower deck to where they only fell a foot or two, but that's a perfect example. I know he was talking about home warranty, things like that, but that's a very big liability claim. I mean, if somebody falls through, breaks their leg, or, worse, gets hurt, you better believe they're going to come after you and sue you, the homeowner. So that's why I always tell people, it's very common on either your homeowner's insurance or your rental properties to maybe only have $100,000, $300,000. I recommend at least having $100,000 or $500,000 on there. Anybody that only has $100,000 or $300,000 on your policy, it's frustrating when people come to me, because I always tell them, and they don't realize that the agent gave them only $100,000 or $300,000 in coverage, when in fact, if you go to $500,000, it might cost you an extra $15 to $20 a year. It's very inexpensive. So I would say 99% of people in my book of business have $500,000 or more on their liability on either their homeowner's insurance or their properties. Literally going from $100,000 to $500,000 might cost you, say, $40 a year. Going from $300,000 to $500,000 might cost you $20 a year. Then that brings me on to my next point of an umbrella policy. So an umbrella is going to protect, if you do get sued, and let's say a $500,000 is not enough coverage on your, say it's your landlord property. An umbrella is going to cover you above and beyond for anything that you can be sued for, whether it's like your auto insurance, your homeowner's insurance, and your rental properties. So if you do have an umbrella policy, your initial policy, if say that person falls through that deck, it's going to pay out up to $500,000. If they're still trying to sue you, then you can get what's called like $1 million umbrella policy on top of that. And then your policy will pay an extra $1 million. Essentially, that $1 million umbrella policy is going to be above and beyond every single policy that you have. So if you have 2 cars, a home, and then, say 5 or 10 rental properties, that umbrella is covering all of it. So it gives you that extra $1 million or $2 million or $3 million of coverage. I tell a lot of people, they think, say 500,000 or even $1 million on top of 500. So you'd have 1.5 million. A lot of people think that is a lot of coverage. I tell people, if that same deck example, you've seen on the news where, 10 or 15 people are on a deck and the deck collapses. If there's 15 people on that deck and you only have, say, 500,000 plus $1 million, that's still only 1.5 million of coverage for 15 people. That's only $100,000 per person if people are seriously injured. So a lot of times that might not even be enough coverage. So you definitely want to look. I know a lot of people think 100,000 or 500,000 sounds like a lot, but it can definitely be exhausted. Another example I've seen where there's a house fire. God forbid if a few people pass away or something like that, they will be coming after you. They can sue, things like that. If you have an umbrella policy, it will cover you on that as well, above and beyond what your general policy has. And then last thing I always tell people, you don't have to have $1 million to be sued like one. They can come after your assets as well as future wages. I've been doing this over 10 years now. Within 6 months of doing this, I had an umbrella policy. Not because I had a lot of assets. 10 years ago, I had zero. But I was trying to protect future wages. Hopefully 10 years later, I was thinking, hopefully I have some assets, things like that. And I don't want somebody, to be able to sue me and garnish all my assets, as well as being able to garnish my wages, 10, 15, 20 years down the road. So that's why, even if somebody's suing you for more money than you have, a lot of people say, it doesn't matter, I don't have anything. Well, they can still garnish your wages. And then the last thing I wanted to mention or talk about was renter's insurance. I would say a lot of people in this group have in their lease where renters are required to have their own renter's insurance. Well, right now, only a third of Americans that rent property actually have renter's insurance. So a lot of times, even though it shows in your lease, they don't have it. A lot of reasons to have them get renter's insurance. It'll cover all of their contents. Let's say there is a fire. It's going to cover their furniture, clothing, electronics. It's going to put them into another place to live. So they're not, you're not having to worry about finding them another rental property. Their insurance company is going to do that. Your insurance, your landlord insurance will not cover their contents. So if, let's say it's an electrical fire and it was no fault of the tenant, but the house burned down, burned all their stuff, they're going to be coming to you trying to get coverage because, even though you didn't do anything wrong, it was an electrical fire. Your policy will not cover that. They can always try suing you. I don't know if they'll get anything out of it, but this way it gives the peace of mind that if they do have renter's insurance, their own policy will cover it. Another thing that I definitely recommend it to have is because of liability insurance. Let's say they have a dog and it goes and bites somebody. They can, the person that got bit, they're going to see who the homeowner of that house was. They're going to sue them generally, as well as the owner of the dog. So they'll probably end up suing both of you. So that's why I recommend them having liability insurance. They can go after the tenant's renter's insurance, and that should pay out. Most landlords only require $100,000 of liability. Again, kind of what I was talking about on the previous slide. If you tell the the tenants that you want them to have, say, 300,000 or 500,000, they might think that's overboard. But for a renter's insurance policy to increase it from, say, 100,000 to 300,000, it might cost about $1 or $2 a month. If you go from 300 to 500, it might cost another $1 a month. So in all reality, they would probably pay an extra $15 or probably $20 to $30 a year for if they just increase that 100,000 to, say, 300 or 500,000. So that's just something to keep in mind as well. And then the last thing I wanted to touch on is when you do have the renters get their own rental insurance policy, a lot of times when they get the renter's insurance, they show you coverage and the landlord happy with that. I always tell people, make them or have them list you as what's called an additional interest. The reason I recommend that is it's just like, for instance, a lot of people on auto insurance, they go and pay 1 month of insurance and never pay it again. They have the ID card to go get their license plates. If they get pulled over by a cop, they show their ID card, but they don't even have insurance. It's the same thing with renter's insurance. They'll show you that they have renter's insurance. They pay 1 month. They never pay again. You have no idea until come claim time. If you are listed as an additional interest, you're listed on that policy as well. So if they do try to sue you, you're listed on the policy, but it's also protecting you if, say, their policy cancels. You will be notified. They will mail you a letter saying this policy canceled. Another thing that's nice is every time it renews, you will get a new declarations page in the mail. So you know that it's still an active policy. If you're not listed as an additional interest, you will have no clue if they cancel that policy 2 or 3 years ago, if they've been a tenant of yours for a while. So definitely make sure you're listed as an additional interest on their renter's insurance policies. And that's pretty much all I have. Like I said, I do auto homeowners insurance. I specialize in rental properties, things like that. I am an investor myself, so I'm very familiar with insuring rental properties. So if you do have any questions, I'd be happy to take a look at your policies. Feel free, give me a call. My phone number is listed. It's 849-9898, or you have my email there as well. So that's about it. Do I have any questions? Let me see here. Bear with me here. Let me close out of here. All right. Sorry about this.
You're right. Can you see? There's a couple questions in the chat there, Jeremy. Can you?
Yeah, it'll take me a second. Would you mind reading it until I get back?
Yeah,
to you?
no, that's fine. Let's see here. Okay, Okay, so somebody wanted to know the typical $100,000 single family. What would be the cost fully loaded protection policy, and does it increase per thousand? I think there's a lot of factors involved with that question too, because I know you got zip codes and other things, but you could.
Yeah, would you mind saying that one again, real
Sure.
fast?
On a typical $100,000 single family, what would be the cost for a fully loaded protection policy, and how does it increase per thousand or 100,000?
Yeah, that's hard to say, and it's hard to decipher what you mean by fully loaded protection policy, because like I mentioned, there's a lot of different policies you can get. But yeah, every zip code's different. I mean, there's a lot of different factors that go into that. So that's really hard. I mean, I'd be happy, like I said, give me a call. I can give that to you within about 10 or 15 minutes.
Yeah, I think that's not a one size fits all, but that's a good explanation. And then what's the difference in the coverage between vacant and builder's risk, a rehab policy?
So a vacant, I mean, you can add an endorsement for like a rehab type endorsement. It's mainly doing like renovations. A builder's risk policy is where you are doing extensive work, taking things down to the studs, low-bearing walls, adding I have a client right now that was adding a complete second story to their house. That's not a vacant, but we need to list that completely as like a builder's risk type policy. It's extensive renovation. That needs to probably be listed as a builder's risk versus a more of like a vacant policy.
Okay. How about how extensive is getting renter's insurance? Can it be required before occupancy? And is there any type of background check done?
For the renter's insurance, I think they're talking about the tenant's renter's insurance. No, there's no background. I mean, at least with my companies that I represent. But yeah, I've not seen that where, they don't look at criminal records, things like that. But time period, you can, if you call a typical insurance company, you can get that immediately within hours, if not minutes. I mean, if somebody called me now and wants renter's insurance, I could do that in 5-10 minutes.
Mm-hmm. Okay. Comment. And then the other one's an auto question. This really isn't too relevant, but I'll go ahead and ask it. If there's an accident and both vehicles have the same insurance company, can the company force you to sign a release or not pay out the basic $100,000 owed?
mean, I don't know if they can force you, but I mean, in specific claim questions, feel free, give me a call on those. I'm not a claims adjuster. I mean, I've been doing this over 10 years. You know, I probably have one of the largest farmers agencies in St. Louis, but I mean, it gets to, I can't specifically say on exact circumstances like that. There's a lot of different factors that go involved, you know, or are involved with that. And like I said, yeah, at the end of the day, I'm not a claims adjuster. I know a lot about claims, but I can't get into, you know, those type of details.
Yeah, they're all individual too. I know a lot of the claims and just a lot of the coverage questions too. Best thing to do would be call Jeremy at his office with your specifics. Have your, have your deck sheet if possible that you have now on your coverage, and if not, just have your questions written down. And Jeremy, he's really good and very detail oriented. He will answer all your questions because I know we could go specifically. I know we did before, and that's one reason we kind of talked before, but I highly recommend you just pick up the phone, call Jeremy. Here's his phone number again, is 314-849-9898. And then his email also there. We will post that on our website. And again, feel free to watch the replay. We will have that up. But yeah, Jeremy's the guy to go to. And I thank you very much, Jeremy, for spending your time. It's
Thanks for having me.
Very well spent. Thank you so much. Okay, let's see. Is Hakeem, are you there somewhere? Yeah, let's see.
I'm here.
There you are. Hey, Hakeem.
Am I clear for you guys?
Yes, you are. Thank you.
Awesome.
Thank you.
Before I get started, I just wanted to see if I could get this clarity. I know we have about 40 people in here. I just wanted to know if it was possible, if anyone in here saw me speak already, if they could just comment like yes in the chat, just so I kind of know, just so I have just a little bit more context.
Yeah, I know you spoke at our group at the beginning of the year, but that's been a long time ago, and I know you've had a lot of things in your life change the same way as some of us.
Absolutely.
Yeah. Well, there's a couple no's. There's yes. Yeah. Well, I think we probably have a kind of a mixture, Hakeem.
Awesome. I just wanted to kind of,
sure.
I like to kind of, have a little bit of, have that context going in. First off, I wanted to say thank you for having me, John. Laura, great to see you. Dwayne, great to see you. It's great to see all you guys. I hope everyone's doing well and staying on offense. I think that's it's one of my biggest themes. I've been trying to, keep up with my teams, is just essentially just stay on offense with everything. Before I kind of get into, what I really want to talk about today, I'm going to give a little bit of context, backstory of just, who I am, what I do, and what I've been working on lately, what I've been doing in the real estate space, how I've been utilizing the digital space to hack attention in different areas to accomplish different goals. And then essentially, I love to set the framework with my talk, to do a lot of Q&A. I think I do almost my best in a Q&A setting, because I'm not holding anything back. I'm willing to go as deep as anyone essentially wants to go on different topics. But a little bit about myself. My name's Hakeem Vallis. I played in the NFL for 3 years, played with the Arizona Cardinals, Detroit Lions, and the New York Football Giants. I've prided myself as a lifelong entrepreneur, getting involved in many different businesses, from selling Skittles to having an iPhone repair business, to starting my real estate journey and flipping houses my freshman year in college. So my background in real estate, my degree in college was business with a concentration in real estate. And at the same time, the girl I was dating while I was in college, her dad had just started a house flipping business, and he took me under his wing, and we flipped about 10 houses together up in North Jersey while I was playing Division I football. And it was an awesome hand-in-hand experience, learning from a mentor, at that time. And then after making it to the NFL, is when I decided to invest in properties in every market I played in. So the first property I bought myself was a fourplex in Phoenix, Arizona, where I utilized a house hacking strategy and used an FHA loan to buy a 4-unit apartment building. And that property kind of comes full circle right now. I bought that back in 2017, and the weekend of July 4th, I just sold it. So I had it for about 3 years. From the 3.5% down payment I put down on it to the return I got 3 years later, it was about a 5x return on that initial investment. So it's pretty exciting. Just, from FHA loans, you don't see that much in that sense. And then as my career progressed and I went to different teams in different cities, bought property in Detroit, bought a duplex, got into the cannabis space, bought 40 acres out there. And after 3 years of playing in the NFL, I decided to retire and essentially double down on what I was doing in the entrepreneurial and real estate space. And since then, closed on a 7-unit apartment building, raised a little bit of private money from guys I played with and just past colleagues to purchase that property. I wanted to raise capital at a smaller scale because my passion and where my focus is in the real estate space is buying larger apartment communities, utilizing syndication. Now that we are in a global pandemic, I think right now there's a lot of, personally, I've seen a lot of bold predictions from a lot of people. Just, I think, sticking to their tried and true ways. I'm not sure historically any of us have lived through anything like this, and the market just feels very fake right now. Nothing seems real, and at least in my own personal opinion, this is one 27-year-old male's opinion. Like this, it's not saying much. But I personally feel like everything's fake. Like I could not believe that I sold my fourplex for what I sold it for. Like I planned on putting that property on the market in late February, early March. And then when the pandemic came, me and my realtor decided not to. And then it was July, and there was a guy who had a 1031, and my realtor reached out and was like, "Hey, you still want to sell? Like, this guy has a wild offer." And then he was like, "Yeah," I put it on the market, and it does not make sense, at least to me personally, how these properties are going for these prices, and the way just the market is reacting in that sense. So my own personal investment strategy right now from a real estate sense is staying on the sidelines and trying to stay cash heavy. So to kind of circle back into what I've been doing to prepare from a real estate sense and what I do on a day-to-day basis. So I run a global media agency called Perspective Global Media, and we focus on podcast production for people in the real estate space, financial services, entrepreneurs, and professional athletes. And what I've been doing from a real estate sense, like I said, my passion is syndication and buying larger apartment communities and doing it with private capital. I've recently launched a podcast called Pro Athletes in Real Estate, where essentially, thinking just from a digital sense, I think nothing can happen without attention. And if people ultimately don't know what you do, you ultimately can't get things accomplished in some senses. Yes, I do believe that there is that private investor. Nobody knows who he is. No one knows his name, but he freaking owns half of the city, and he still, uses a home telephone and a fax machine. But yes, I think that person exists in every RIA group probably. And one man's opinion, how I've gotten most of my success in a real estate and entrepreneurial sense is utilizing the digital assets and platforms that we have afforded to us that are essentially for free. I personally, just to kind of be super meta and how podcasts and how this podcast is going to help me buy real estate in the next, probably I say 8 to 12 months. I'm patient, so I'm not in a rush for this. But essentially what I'm doing with pro athletes in real estate is I play professional sports. I believe that a lot of podcasts just highlight and don't really go into the nitty gritty and bring real value from an X's and O's standpoint, versus just like a, hey, look what I did. 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 And essentially this is like a podcast for athletes by athletes. And by doing this, I'm creating a community. The guys that I'm having come on the show are current pro athletes who are playing pro football, pro baseball, so far pro basketball, pro soccer, and essentially go into what they're doing as a pro athlete, but doing this podcast not to, you know, highlight and show off what they're doing this as if they're speaking to a room full of athletes and what they should be doing in that sense. But what I've done, I know I'm kind of going a little bit deep here, but what I've done on the back end to really create community is, one, with the athletes that I've had come on the podcast, I've essentially, so one man's opinion, but something that works when you have some type of show, some type of platform, or some type of, you got something just like this RIA group. I mean, this is on a much, much larger scale. But when you think of a podcast in that sense, one thing that I've done is I have my past guests, for example, every 5 episodes. What I'll do in a COVID world, in a virtual world, is ship a bottle of wine out to each of those guests every 5 episodes. And then we'll all come on and have a virtual happy hour and talk about what we're doing in a real estate sense. So from a value standpoint, yeah, subscribers are cool and things like that are cool. But I think from a community building standpoint, if you can actually be patient and reverse engineer a goal, you know, in the next 12 months, I want to be at, let's say, episode 75 on this show. But with that, that's having 75 pro athletes that I've built, one, a deeper relationship, who are all doing real estate, and the community I've built from all of their audiences. And then I've essentially created some type of lead capture, you know, thinking of, you know, from a digital standpoint, of getting qualified and accredited investors to, one, show and see and have access to my deal flow, but are people that I've, you know, ultimately are my colleagues in that sense. But I say that to say everyone can do this in any sense of whatever type of community they want to build. From a real estate standpoint, I think in a pandemic, depending on what your strategy is, you know, unless you're, from my one man's opinion, like I only see like wholesaling working and possibly fix and flip in the right scenarios working, like right now. But that's not what I personally do. But if you're a person who's on the sideline and waiting and wants to kind of see what's ultimately going to happen, I personally think from a podcast standpoint, you know, a media digital asset standpoint, is it's the easiest way to, one, build community, but two, figure out what other people are doing. I think a lot of people are very just secret based. You know, real estate investors, they tell secrets to people that they actually build relationships with. And I think by having people, one, come on from an interview standpoint, having those private conversations, I think off chat in that sense, is the greatest way to figure out, you know, what is John Lee doing right now to ultimately build and grow his business. Like, I don't know, but I do plan on probably after this or like within this week, following up with him and seeing like, hey, John, like what's going on in the back end from an investment standpoint. And I think on an everyday basis, if you're someone who really lives, breathes real estate, it's the only way to grow right now. There's no book that you can read right now to figure out how to invest in a pandemic, if you know what I'm saying. There's no course that you can take right now on investing in a pandemic because no one's done it. We're all going through it right now. So I personally think a podcast or any type of interview platform show where you can actually bring other people on, whether you're a newbie or whether you're an expert. I think a lot of people who've already gotten, you know, complacent are ultimately seeing the repercussions of that, you know, throughout this pandemic. But I think utilizing something like this is just something to, you know, keep your business ultimately moving forward. Like like I said, when I started this, my number one thing right now is just throughout this pandemic is just figuring out ways to stay on offense. I think ultimately a lot of people are dwelling, you know, throughout this pandemic. I think it's the easiest way to create excuses on the back. Like, yes, I think we all need to take care of our mental health. I think we all need to not judge ourselves on the bad days that we have, the slow days that we have, the rough days that we have. But I ultimately think that it's the perfect time to stay on offense. Ultimately, because, you know, the people who dwell throughout this pandemic are ultimately going to be the same people who make excuses as to what happened. Why aren't you doing real estate anymore? Oh, you know, the pandemic. How many people in 08, when 08 came around? I'm only 27. I'm not saying this like I was an investor in 08, but I have had conversations with so many people, and people who are my age now who don't do real estate because they watch their parents ultimately go through a pandemic, or not a pandemic, but 08. And essentially their biggest excuse is, I don't do real estate because my parents lost all their money and blah, 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 blah. And it's the lazy excuse to ultimately, you know, not face the truth that, you know, you couldn't pivot, you couldn't stay on offense. And I think now is always the time to stay on offense. But that's all I really have from my own, you know, personal perspective. That's what I'm doing from a real estate standpoint. I'm doing this show and having conversations with investors on a daily basis on what they're doing, and ultimately educate myself. Like I said, I say wholesaling and fix and flip is working right now because I've had conversations within the last month with investors who are fix and flipping and wholesaling, and I've seen the numbers and I'm like, that works. And I've had like the thought in my head, like maybe I should think about messing around in that space, but like I'm ultimately sticking to my guns. But I'm using this to just educate myself, but stay on offense for when I see opportunities as they come forward. But yes, that's ultimately what I have. I'd love to open this up to any questions that anyone has. And if not, I really, really always appreciate the opportunity to come speak to your group, John.
Some great points, Hakeem. If anybody has anything, go ahead and feel free to ask him right now. I like the way you're sitting and seeing what happens, but I'm kind of like you. I have, you know, people are actually coming to me for different deals right now, things that I've kind of been just sitting back waiting about, but I see a lot going on around me, and some of the values, maybe they're superficial, maybe they're not, because people are staying home, they're putting more money into these things, you know. Yeah, there's some people having trouble with the rental properties, but that's not all of it. There's a lot more going on, Hakeem.
That's real. I couldn't come to just, like, I could sit and wait, but I need like the way for me to be active is to continue to just have these conversations. And okay, that's an interesting, I never knew I could do that. I've never done something like that. Oh, that's interesting. Starting a construction company in the middle of like a pandemic, like, why are you doing that? But okay, that's why you're doing that, and that's how it's working for you. Like, I would never think that way. But that's my version of staying on offense right now from a real estate standpoint.
Yeah, I like the way you put offense too, on offense instead of defense. And that's something that's kind of got me thinking a little different, because I guess I was thinking more defensive, like just sit and cover all the bases, see what happens. But let's see what's, like you talked about in 2008, I call those the ice ages. This is the third one I've been through. It's when everything just goes wacko, and I just, I call it an ice age because you don't know what's going to happen. People are not going to stop living in homes. They're not going to stop wanting real estate. I know that much. Now, things are going to be adjusted. There's going to be new ways of doing things. I like what you're doing, and your podcast, I can't wait to tune into that and listen to those broadcasts, because I'd be very curious too to see what other people are doing, because the people on the cutting edge like yourself right now, they're the ones that's going to make things happen coming up. And things are going to come up,
Absolutely. It's going to be interesting to see. But yeah, I always say offense over defense. I'd rather play a game and win it 173 to 120 than, win 1-0. Because I'd rather give myself the most amount of opportunities and actually do the things that I want to do versus just being on defense and how that goes.
That's a great point. Great point.
Is it okay to interject here?
Go right ahead, please.
And how can I find out more information about the podcast?
For me, you can go to perspectiveglobalmedia.com. Actually just drop it in. I'll drop two things in the chat.
Can you put it in the chat? And we'll also go ahead and share that afterwards. But go ahead, please put it in the chat for us, Hakeem.
Okay, cool. Perspectiveglobalmedia.com is the best way, and you can, it's the easiest way to just set up a quick phone call. And yeah, we just launched a new product. It's been exciting times with the business.
Okay,
No problem. And I'm trying to find who just asked that question. Was that Rosalind?
No, it's Edwina Johnson.
Edwina, okay.
Okay, sorry. I'm trying to figure there's a lot of people here trying to move it around, but cool. Any other questions? Oh, I did not put the right website.
Yeah, we'll share the, oh, there you go. Okay, yeah, media.
Put the wrong
I was
website.
wondering, but I mean, I thought maybe you had another one. I didn't know. But yeah, we'll
No.
share that. Yeah, perspectiveglobalmedia.com. That's the website.
Would it be all right to
Yes,
ask
sir.
a question still, or are you guys gonna log off for now?
Oh no, definitely ask a question. What's up?
Okay,
Don?
sorry. It seemed like you guys were wanting to leave, so I just thought I would try to interject a question. So,
Oh, no.
you're primarily a buy and hold investor, is that correct? Or are you just still fix and flipping? Am I understanding that correctly?
Oh no, I'm just buy and hold. So I fixed and flipped in college. So that was like 2012 through 2015 ish. And then that girl I was dating, me and her broke up, and I was flipping houses with her dad. So that relationship kind of ended. And then everything I've bought since has been buy and hold and a land deal for cannabis.
Okay. How long did it take for you to compile enough knowledge to be able to go solo, I guess, if that makes sense?
Yeah. It took a minute. I mean, like I said, I took my degree is business with a concentration in real estate. So like that's all I did was real estate law. Like it was a lot. It was boring. But it was learning about cap rates in college was valuable for me. But I wasn't learning the investment side. It was learning, how to be a finance guy at Marcus and Millichap, or how to be an analyst at, CBRE or something of that sort. And then learning on the investment side from my ex's dad, being just young and dumb, I felt like I was more going through the motions because it was convenient. It was easy. I was already in that facet, but I was doing everything. I was handwriting our direct mail. I was putting down on floors. I was putting in offers on pre-foreclosures. It was an awesome hand-in-hand experience in that sense. But when I put my MBA on hold in 2016, January of 2016, and I started training for the NFL. It's like January 1 through April, whenever the draft is. That 4 whatever months is when I found bigger pockets. And that was when I decided, if I make it to the NFL, I'm doing real estate. And if I don't make it to the NFL, I'm doing real estate. And I listened to every podcast and every book that every guest recommended. I'd then get the audiobook and listen to that. So I had like a 3-hour commute every day to my training facility. So I consumed all of that. And then on top of that, the whole season I was reading books because I realized I didn't have enough time to actually do it once I made it to Arizona. And then once the off season started, honestly, it was when I got a nod of approval from my dad. When he gave me a nod of approval, I was like, oh shit, I can actually do this. It was like, I called my dad. I had the whole plan set up, found the property, analyzed it, had all the numbers, but was still nervous to actually put an offer in. And I hadn't told my dad everything yet. And then I just called him. I was like, yo, Dad, guess what I just did? Blah, 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 blah. He was like, what? That's so cool. And I was like, wait, what? And he was like, I'm like, you're not gonna be skeptical and break it all down. And he was just super excited. And then I just pulled the trigger, and it was been running loose since.
Yeah, my main concern is, I've only been doing really real estate investing education for about a year now, pretty much intermittently. I've been focusing on multifamily at first, but it seems like the capital requirements are high. So I'm trying to start a little bit lower with wholesale and then, go to fix and flip and then finally buy and hold as my ultimate strategy. Sorry, go for it.
Actually, no, go ahead, finish. I didn't mean to cut you off. I thought you were finished. Go ahead.
Oh, no, yeah, sorry. So basically, trying to segue into my question here is I'm trying to learn about how to appropriately determine the rehab costs before I get into a deal. How did you learn how to expertly determine that?
Spending time with contractors. That my ex-girlfriend's dad was, his first cousin was our contract on our GC on every deal. So every house we went through, I walked the properties with him. And if you walk a house with a property with a contractor, they just know everything. Oh, that's going to cost this, that's going to cost that. But when you do that 150 times, 400 times, when you do that a lot and then buy 3 properties after doing that, you start to understand and learn. It's just osmosis and actually putting the work in. And how do you find those people to do that? There's finding mentors, the faster way to do it, and how I would do it. And like, especially if I'm new, like you saying you're passionate and you want to get into multifamily real estate. A lot of people say that when they get started, and then they take the same route that you take is, I'm going to wholesale first to make a little money because I don't have money yet. Use that money to fix and flip to make a little bit more money, and then use that money to get into multifamily, 10 to 15 years later after we've been through 3 or 4 more ups and downs of the market. I think that if you're just patient and take your time, I think you can get into multifamily like first, but not have 100% of the deal. Maybe have 0.5% of a deal, because you took this next year and a half, 2 years, and like this is how I would do it. Like if I was to start over again, like just knowing what I know now, doing some sort of, let's say, interview style show by interviewing. Are you in St. Louis?
Yes, I'm in Chesterfield. Yes.
But by interviewing every single multifamily apartment owner in St. Louis, every single one of them, because it would be easier to do that than asking all of them to pick their brains over coffee. If you reached out to them and said, hey, I want to pick your brain over coffee, I'm a young and upcoming investor and want to do multifamily, 99.99% of them are going to say no. But if you reach out to them and say, hey, love what you're doing, I see you've grown your portfolio, you bought this property, that property, would love to have you come on my show called the St. Louis Real Estate Podcast, probably 90% will say yes to come on that show. After the show, when you've built that relationship on the back end, is how you build those types of relationships to now figure out how can you bring value to these people. If you interview the 600 multifamily investors in St. Louis, you'll figure out a way to connect the dots. Meaning you'll know that the guy from episode 4 can bring value to the guy from episode 14. But being that person who's the intersection between connecting the dots is how you can figure out your way into deals. But that takes time and that takes effort, and that takes, like, that's how I would do it. That's one man's opinion. Like I said, I thrive on utilizing attention and utilizing different ways to hack, break people's pattern, disrupt people's normal patterns to actually get in touch with them to ultimately accomplish what I want to accomplish. But that's what I would do personally, because sure. Like I said, if you're patient though, if you're in a rush, then you're going to want to wholesale to make quick cash, to do the next thing, to do the next thing, to do the next thing, and you'll never be great at one thing. And like I said, you'll probably go through 1 or 3 more cycles in the market, and that strategy might not work. Just like right now, buy and hold doesn't work right now. Do you know what I'm saying?
Yeah, no, that makes sense. Well, thank you very much, Hakeem. It looks like Ken has a question on the chat if you want to take a look at that.
Do I still do the walkthroughs? Me personally, from a walkthrough standpoint, it depends on the property. Like the last property bought in Des Moines, like I did the walkthrough with 3 different contractors. Because I mean, I think like one, especially if you're in a new, like I don't, like I buy properties in the markets I live in, but like I live in St. Louis and I don't plan on buying property in St. Louis. So I buy properties in different markets. What I do is to find a contractor that I like, trust, and respect. One, I'll find a couple contractors, walk the property with them, with each of them, get their opinion on their thoughts on the materials and the product costs and what it's going to cost here versus what it's going to cost in this market. Like those things essentially can change. But like, I'm not crazy about rehab. Like I'm not from thinking about like my partnerships that I've been a part of, I haven't been the guy on the rehab side. That's just hasn't been my role for the most part, except back when I was in college and fixing and flipping. Hope that answered your question, Ken. Any more questions?
Anybody else got a question? I like the way that you explained that though too, because so many people these days, like having them on your show, but you add value to somebody instead of saying you want to take them out for coffee and pick their brain. Because like you said, 99% of the people, I'm sorry, it's not that you don't want to help, but you don't really have time today. There's so many things going on. And plus right now it's kind of tough to go out and get coffee. I mean,
100%. And I think most people everyone has a story and no one is listening. And when you're the person who provides a platform for someone to tell their story on, they tend to love you forever. That is your value add up front. Like everyone wants to figure out what's my value add proposition that I can bring to the table to anyone. most people, it hits a different endorphin in your brain when you ask someone to come on your show versus let's go to Starbucks and I want to know about your entire investment career. When you could do the same exact thing, but just on a show, if you get what I'm saying. And then on top of that, on the back end, now you can put out content at scale, which is ultimately going to bring more and more community and more thoughts and more, real estate is a people business. If you want to, if I think real estate's a people business. If you can thrive in real estate and be introverted, but if you're not introverted, tap into not being introverted, and ultimately you can build something big, because if the more people you work with, the more people you get ideas from, the better you're going to be.
Yeah, I mean, you make a good points with the value add. Honestly, I'm not really sure as a new investor what I can do in terms of value add. So it's gonna probably have to be something I'm gonna have to think on.
100%. And then you just work on being fast on your toes, meaning after getting done with an episode, after interviewing someone for 30 minutes, throughout that interview, you need to be thinking fast on how can I help this dude? Somehow, some way, some shape, some form. Is it literally just going to the tax assessor's office once a month for this dude because it's going to help him save some time? That's the type of stuff you need to be figuring out. Not at the end of the episode when you guys are off the script saying, so how can I bring value to you? I think that's not the right question to ask. When people ask that, that's now putting stress on the person you're asking, because they're not just thinking how can this kid bring value? That's not what they're thinking initially. But if you say, hey, by the way, if you want, when you talked about on the episode how you go to the tax assessor's office, once a week and you do X, Y, and Z and pull all these names, whatever, I'd love to do that for you. That's what you do on every single episode. And it's just more and 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 more at bats at what you ultimately want to accomplish, versus doing wholesaling, which you don't want to do fix and flip, which you don't want to do, to get into buy and hold on rental properties, which you want to do. If that makes sense.
No, you make good points. Thank you, Hakeem.
No problem, John.
By the way, oh, sorry, John, go for it.
No,
Were you going to say anything?
no, go right ahead.
Oh, I was just going to say, Hakeem, I think I heard you say you're a BP member. I'm also on BP, so if you're open to connecting, I'd like to connect with you.
Oh, hell yeah. Hell
Okay,
yeah. No,
I'll find you then.
Word.
Another good point you made just right then too, I just wanted to kind of go on that a little bit, is it's real estate is a people business, Hakeem. It's not so, you can forget all the property. What you're doing is you're solving problems for other people. When they put a for sale sign out there, that's just a help wanted sign is all that is. They have a problem they need a solution for. And if you're the problem solver, which is what you're doing by bringing the people together and working on relationships, you might not have the solution for every problem right then, but you do down the road. And what you're doing with the podcast and some of that, you're meeting a wide variety of people. We all have different skills when it comes to real estate investing. We all have different ideas and different ways of doing stuff. A lot of the stuff is not different, but it's just different ways of doing it. And if you know the right person, hey, this guy does this a little different than somebody else, but he could probably do it. And by doing this and connecting the relationships, that's just kind of puts the pieces together. So, I mean, that's a really good point that you brought up there.
Appreciate that, John.
Thank you. Anybody else have any questions? We really appreciate your time tonight, Hakeem. I know you had to make a quick trip to New Jersey from our area here, and
yes, sir. Just got 15-hour drive with a 2-year-old. That was
oh my gosh,
it was a lot. It was a lot. I just got in about 3 hours ago.
Oh my gosh. Well, we do, yeah, definitely wish you the best. We're not going to take up all your night, but we do appreciate very much you coming here and spending your time and sharing it with us.
Absolutely, my friend. Appreciate you guys. Really enjoyed I always enjoy talking about some real estate.
Yeah.
Thank you, Hakeem. Thank you.
Thank you.
No doubt. See you, Laura.
All right. Well, thank you so much. If anybody else doesn't have any questions, we'll let you go. And thank you, everybody, for tuning in to the broadcast tonight. It was a lot of good information. I've learned a lot. In fact, I got two pages of notes here myself, and I'm going to have to go back through and see if I can read my chicken scratch, which I'm sure will. We'll put the replay up on the website. It takes me a little time to get the rendition done, get it up there, but it'll be up as soon as we can get it done. And with the contact information, if anybody wants to know anything, always check at the website. As you know, we do have the lawyers every every Friday at 11 o'clock. Davis Travellini, LLC. They keep us updated on the evictions in St. Louis and anything else current. We also thank you for joining our professional premiere series. We will keep that going. Like Lloyd said before, we have Ron LeGrand coming on the 3rd. That's a Saturday, a special session we're going to have, and he's got some other trainings coming up just for us. So watch your emails, look at the website. If you need to know anything, if you have any other questions, you can usually find them out there, or just reach out to us and send us an email and ask us. So again, thank you everybody for tuning in, and we will see you soon.
Hey,
Hey, thanks, John.
thank you, John.
All right.
Take care.
Bye now.
Have a good night, everyone. Thank you.
Thanks.
Night.